Also with us, Hiren Ved, Director and CIO of Alchemy Capital Management, joining in. Hiren, what are your thoughts after this budget? Are you disappointed with what's happened on capital gains, or are you impressed that we've, pulled off that fiscal consolidation number better than what the street was expecting? All in all, good budget, bad budget?
No, I think on the whole, the budget is good. Obviously, for market participants, the increase in capital gains tax is a sentiment dampener. Yes, I mean, over a medium to long term, these things get evened out. If you go back and look at when the 10% long-term capital gains was introduced, obviously there was an impact for a short period of time, but then everybody adjusted to it, right? Well, I mean, our sense was that there was no overarching need to raise resources and therefore tinkering with capital gains tax. But I think if I were to read between the lines, my guess is that given that capital markets were competing fiercely with bank deposits, and the worry that the regulators and the government had was that will this skew savings substantially in favor of capital markets versus other instruments. I think this is probably to kind of calm down and cool down the markets a little bit because there was a kind of a runaway rally in the markets. In my view, longer run, it really doesn't matter. But in the very short term, it is definitely a sentiment dampener.
Hiren, just want to understand to what extent it's a sentiment dampener. I mean, the tweaking on STT for futures and options, perhaps not as bad as what was expected?
I don't think that the increase in STT on futures and options is a dampener, because frankly speaking, that was expected, right? I mean, and I think that, something was supposed to happen there, and I think it has happened. I think the dampener is really in terms of tinkering of the long-term capital gains tax to 12.5% and 20%, which was not expected, and therefore to some extent this could be a dampener in the short run. But as I mentioned, in the medium to long term, people adjust, market participants adjust and move on, and I think that's what will happen. Outside of that, and I think that what the government has done is that used the additional resources that they have to reduce the fiscal deficit, which on the whole should be positive for the economy because it reduces your cost of capital. And secondly, I think that they have given some support, to human capital, right, across the board. And also by reducing custom duties on a few products, and we'll have to see the fine print, the idea is to promote value addition and reduce the costs for local manufacturing. So I think broadly, having kept the capex number at what it is, they continue to do the heavy lifting. They've used the additional resources to help, give a little bit of a fillip to consumption, which is not bad. So you have a little more balanced growth. And I think, broadly speaking, also removing angel tax is a great step, because you need new entrepreneurs and they need risk capital. So I think, broadly speaking, the thrust of the budget is fairly good. I don't think the budget is bad. I think it's just that, all capital markets players don't want taxes to go up. Let's be realistic, right?
Yeah.
So if that goes up,
no one likes to be taxed. No one likes to be taxed, and capital market players have always been very clear that this is still nascent. You need to get more investors on. Don't tax. Have we reached that inflection point where the government feels comfortable in increasing taxes on capital gains, looking at the huge gains people have made as well? But hold that thought. I just want to get in Rajiv Anand, Deputy MD of Axis Bank, for his first take on the budget. Rajiv, welcome. Great to have you on NDTV Profit. And, just to understand from your perspective, the support given to MSMEs, the support given for educational loans, how do you see all of these measures in a broader view?
Firstly, I think notwithstanding the whole issue of increase in capital gains, which obviously the markets are a bit disappointed. But the way that I think about it is there's been all your viewers have made a truckload of money over the last few years. You're taking a little bit of that gains to support two things: the angel tax to create more entrepreneurship and money in the middle class pockets. And I don't think we should be too bothered with that. Maybe in the short term, yes, but I think in the long term, I think that allocation of resources I'm quite comfortable with. There is focus on job creation, particularly through the MSME sector, and I think if you look at bank balance sheets, the size of the books of lending to MSMEs has only increased quite strongly over the last 3 to 5 years. And my own belief is that the MSME sector will be over the next decade what retail was over the last decade, for banks, in terms of the ability to lend to these entities because of the entrepreneurship that they bring, because of the infrastructure that is getting built, more transparency through GST, digital, etc., has made many of these entities a lot more bankable. And therefore, the fact that there is greater thrust on the MSME sector is quite heartwarming as a banker. I think educational loans, addresses the whole issue of employability. And I think, there was a headline in this morning's newspaper as well from the economic survey that many of the graduates are, in a sense, not employable. And I think that is a problem that corporate India, faces and has been a big issue over the last few years. And therefore, being able to fix the employability and therefore be able to, fix employment as we go forward, to my mind, is a very positive step.
Rajiv, Mr. Anand, it's also Samina joining in.